Good morning and welcome to your midweek edition of the Market Review, where we bring you developments in the capital market and financial market as it affects our economy. Today we're looking at private equity activities and of course venture capital and how it's impacting the market and economy. But let's begin with a lineup for today. President Buhari's approval of the CBN-led Infraco PLC is gaining traction. That's one thing we'll look at. And FBN Quest Funds Limited is exploring private equity and portfolio enhancement. Infra Credit's drawdown of $10 million sovereign loan agreement from the Africa Development Bank. And we'll take a look at PricewaterhouseCoopers analysis on global private equity activities from emerging markets to frontier markets. For today, our focus will be on private equity, investment activities, and frontier markets. Let's begin with the fact that President Muhammadu Buhari has approved the CBN-led Infraco PLC. This Infraco PLC will be designed to support development across the nation. It's a 15 trillion naira development, and it's going to explore how it will help galvanize growth in the Nigerian economy, particularly in response to the disruptions of COVID-19. The governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, reiterated this yesterday at the 13th Annual Banking and Finance Conference powered by the Chartered Institute of Bankers of Nigeria, which focused on facilitating sustainable financing for the future. The governor said the whole scheme will be in coordination with other notable private equity and investment companies. The vehicle will also help to ensure that Nigeria can access more private capital to address its burdening infrastructure and, of course, unlock growth for the economy. We'll give you further updates on this development, but it's a welcome, good approach, but how it's managed and how it comes out, it will be very important as Nigeria continues to vie for funds in this critical time. Let's go on to FBN Quest. If you understand the fact that private equity is very important in our climb, the major discussion has been that we cannot, even if we don't spend any amount from the budget and take everything, the last budget, 10 trillion naira, and invest in capital infrastructure is still not enough to address the deficit, which is running to trillions of naira in Nigeria. So private capital is very important, and that is why this segment looks at it. And this is also the thinking of various investment companies across the country and even across frontier markets like Nigeria. FBN Quest Funds Limited is not left out, as they're looking at an alternative investment subsidiary of FBN Holdings. FBN Quest Funds Limited is raising awareness on the opportunity of private equity for portfolio enhancement, in addition to the use of traditional investing assets. This is one of the key messages it delivered at a virtual interactive session with financial journalists focusing on the alternative investment and private equity business, the financial markets, and the broader economy. Ijoma Agboti, the managing director of FBN Quest Funds Limited, who spoke of the organization's focus on developing a broad platform that will provide diversification and return-enhancing products for clients through various alternative asset classes. According to her, since we were established in 2003, FBN Quest Funds Limited has deployed in excess of 20 billion naira in over 70 companies and assets across various portfolios. And they have continued to partner with portfolio companies to deliver growth capital and provide value creation support. According to her, they believe in working closely with clients to deliver solutions that fall within their specific risk tolerance boundaries and meet their overall portfolio objectives. On the financial markets and the economy, the FBN Quest research team shared their views on the outlook for the Nigerian economy and public markets. Overall, analysts projected a moderate economic recovery in 2021, which has been something alluded to by several other experts for Nigeria, as influenced by the COVID-19 pandemic. But they also pointed out that the undervaluation of several banking and telecom companies as attractive investment opportunities for stock market investors. Information drives an investor's ability to read and monitor the markets. We think our research capability sets us apart in the Nigerian market and underpins our value approach to investing in private and public companies. We are delighted to share our views and added value to the socioeconomic discussions, stated Mr. Tunde Bidoye, Head of Equity Research at FBN Quest. FBN Quest over the time has been recognized for outstanding transactions delivered and has received several awards for like Deal of the Year, Africa Restructuring. The firm has also received 3 awards from EMEA Finance for the Best African Sukuk for the FGN 100 billion Naira Sukuk, Best Local Investment Bank in Nigeria, Best Asset Manager, as well as FMDQ Gold Award for the Most Innovative Registration Member. Just showing you how investment banks are taking seriously the opportunities in private equity and portfolio enhancement. You could see there that they've doled out 20 billion naira and it has been deployed to 70 companies. So imagine more of that happening in this space. We could see if like 3 or 4 more join and continue in that light, we could see over 200 in a year, benefiting and scaling activities and operations. Interesting perspective from FBN Quest Funds Limited. Let's go on to InfraCredit. InfraCredit, as we know, is an AAA-rated specialized infrastructure credit guarantee institution. It announced recently the drawdown of $10 million subordinated unsecured 10-year facility has been completed under the subordinated loan agreement with the African Development Bank and International Financial Institution and Multilateral Development Bank in the country. Now, this fund is designed to support activities and its quest to address infrastructure challenges in the country. According to a statement by Stefan Naletambi, the bank's Director of Financial Sector, this comes at a time the banks approved the facility. According to her, the bank's support will strengthen the capital base of InfraCredit, underpinning the expansion of the company's core business of guaranteeing of bonds issued to fund infrastructure projects. This adds to the bank's existing initiatives to mobilize domestic, institutional, and stimulate non-sovereign local debt capital market development in Nigeria. This ultimately helps to increase private sector financing for critical infrastructure projects in key sectors including energy, water, health, and education through local capital markets. If you hear that, you understand that they're looking at sustainable financing. Specifically, this facility will help to increase private sector financing for critical infrastructural projects in sectors such as power, renewable energy, telecommunications, healthcare, transportation, agriculture, amongst others. This investment, AFDB says, will demonstrate the strong investor confidence in the fundamentals of InfraCredit's business and will promote the deepening of the local debt capital market. Pursuant to the drawdown, InfraCredit's capital base will increase to $146 million, which is about 58.5 billion naira in Nigerian currency. According to the Chief Executive Officer of InfraCredit, Mr. Chinua Azubike, despite the impact of COVID-19 and changes to macroeconomic assumptions, they are pleased to have reached yet another milestone in the pursuit to strengthen the robust balance sheet and guarantee issuing capacity. Notwithstanding challenging market conditions, they've continued to demonstrate the strong fundamentals, solid underlying portfolio performance, proven track record, and profitability. With the admission of the African Development Bank, the capital structure, they are confident of a continuing ability to deepen market penetration and support access to long-term domestic credit for the growing pipeline of infrastructure projects that will create jobs and support local economic growth. That's a plus to major players, InfraCredit, as they have just received that drawdown from Africa Development Bank. And definitely, those investments will go to sustainability and drive our quest to achieve the 17 goals of the Sustainable Development Goals Plan as evolved by the United Nations. Don't forget that the achievement timeline is 2030, and investments like that could be classified into sustainable development. So what's been happening at the global level? What is the reflection, and what are the opportunities that the emerging and frontier markets can look at? Let's take a look at equity funds and activities. According to PwC, private equity funds have been hit by the reduction in activity and growth prospects of their portfolio companies, no thanks to the COVID-19 disruptions, the induced pandemic disruptions. The combination of including light manufacturing and urban consumer businesses, which represent a large share of the investment of growth equity funds, private equity funds where possible, and by providing hands-on operational support. In the short term, private equity funds returns will take a hit as a result of significant write-downs in portfolio companies' valuations, exchange rate volatility, and challenges in exiting investments. The financial performance of the asset class in emerging markets has suffered, while overall private equity market volumes in emerging markets are expected to contract. Fundraising in emerging markets is expected to become more challenging in the next 2 to 3 years, especially for funds targeting small and mid-sized companies. These funds will struggle to survive, while larger and more established funds will be less in terms of impact, feeling the impact of the funds, but they will still need development financial institutions to support the activities. The composition of the limited partner LP base in emerging markets will shift. This will come with international institutional investors being constrained in their asset allocation to emerging markets. The life cycle of funds will see a lengthening in light of longer fundraising cycles and longer investee holding periods due to challenges in achieving exits. Against the context of scarce venture capital funding in most emerging markets, these trends will be magnified for venture capital funds due to the nature of investees and investors. Startup investees need significantly more hand-holding and access to follow-on funding, while less institutionalized VC investors may step back owing to high perceived risk. The crisis will also bring opportunities for private equity fund managers. The private equity fund's business model is well suited to help navigate companies out of economic crisis. And fund managers can also become partners in rebuilding sectors and economies through reducing equity fund gap and leveraging their strategic and operational know-how to support structural changes across businesses. Fund managers also have an opportunity to pivot and ride a number of mega trends that are expected to emerge post-COVID-19. This includes shifts in global supply chains toward localization of strategic sectors and diversification of the supply base for products with complex value chains, and acceleration in digital transformation, which shows increased adoption in digital platforms by businesses and innovative digital business models rising in the digital urban consumer activities. And an increased appetite for impact-oriented investments with a focus on businesses related to COVID-19 response and resilience, and with regard to the expected reduction in public sector fund going forward. In the medium term, venture capital funds will benefit from opportunities to leverage technology and pivot business models. Fund managers also have an opportunity to better leverage development financial institutions' support, in addition to providing funding to support fundraising at a time of negative fluctuations in the economic cycle. DFIs can scale direct investments into investee companies, mobilize third-party capital, and support regulatory change. The PE funds sector covers a number of investment strategies. The main types are buyout, growth equity, and VC funds. This note will focus on growth equity funds and VC funds, which accounts for an important share of investments in the sector for those DFIs that operate in the space. As growth equity funds tend to invest across multiple sectors, a number of mega trends affecting specific industries are described later on. Growth equity funds typically focus on small and mid-sized companies seeking capital and knowledge to grow and professionalize. Compared to developed markets, the scale of private equity in emerging markets remain limited and is mostly concentrated in Asia. Only 23% of private equity global fundraising went to emerging markets in 2018, even though emerging markets represented 60% of global gross domestic product. About 85% of private equity capital raised in emerging markets goes to emerging Asia, with China and India accounting for 38% and 8% respectively. In the 10 years period prior to COVID-19, that's a decade before COVID, private equity in emerging markets has seen positive trends in aggregates, mainly driven by Asia. In all the emerging markets, over the period of 2008 to 2018, a decade, the total private equity activity grew from about $24 billion to about $53 billion annually, with an increase in total PE fundraising from about $58 billion to about $75 billion annually. Activity in Asia and in particular China drove the growth observed over the past decade, and growth in private equity represented a significant share of PE activity in emerging markets. Between 2014 to 2018 period, the cumulative investments in growth equity accounted for about 34% of the total private equity investments, followed by buyouts and venture capital investments. The buyout investments are largely concentrated in Asia too, and in China, and to some extent in the Central and Eastern Europe region. The Commonwealth of Independent States region also partakes, while they remain marginal in sub-Saharan Africa, which of course is a huge interest here, and in the Middle East and North Africa, MENA regions. So in most regions, growth equity funds are the most prominent type of private equity that also covers other types of private capital investments that plays an important role in the economy. So the level of dry powder cash reserves that fund managers have available is relatively high in emerging markets, in line with the trend observed globally. So fund managers in emerging markets entered the COVID-19 crisis counting on up to $400 billion of available capital at the end of 2019. An analysis based on the International Financial Corporation portfolio suggests that in relative terms, the dry powder is distributed homogeneously across most of the regions. The private equity funds are being hit by the reduction in activity and future growth prospects of their investee companies. The COVID-19 crisis is affecting the short term, within 1 year, and medium term, within 2 to 3 years, growth prospects of funds portfolio companies, which are generally experiencing negative impacts on revenues, costs, and profitability. Further, these businesses might find it hard to service debt, and heightened risk aversion could lead to climbing borrowing costs, bankruptcies, and defaults. The combination of demand shocks reducing income availability and supply shocks disrupting global value chains is impacting the entire business lines and sectors. Light manufacturing and urban consumer businesses, which represent a large share of the investment of growth equity funds, are examples of sectors currently affected in numerous markets. This situation marks a contrast to the experience fund managers had during the global financial crisis, when there was availability of credit. Availability of credit was an issue, but the fundamentals of economic growth that characterized emerging markets and the underlying growth prospects of investee companies did not substantially deteriorate. World Bank in 2020, in its Global Economic June Prospects Forum in Washington, D.C., that had Financial Times and other players there, looked at the impact of coronavirus across industry and finance. Also, the Financial Times group was there. In January 27, 2020, Campbell Lutyens said that LP sentiments updates views on fundraising and returns for the companies. It also looked at the big 5 public private equity funds in the US, which are Apollo, Blackstone, KKR, Harris, and Carlyle. They posted valuation markdowns in the range of 8% to 20% for the top 5 PEs in the world. Also, the analysis of public private equity firms' earnings in first quarter 2020 for May 11, 2020 also showed some of these trends and developments across board, and also the International Finance Corporation analysis, which we are also taking, and the PricewaterhouseCoopers research analysis on private equity activities across the globe. So it shows, therefore, that fund managers sought temporary discussions with fund managers across the International Finance Corporation portfolio indicate that they are currently involved in portfolio management activities to understand the implications of the crisis on investees in terms of liquidity management, cost and revenues, and business continuity along the supply chain. Government support to companies that are experiencing temporary difficulties, for example, through access to loan programs as seen in countries like Nigeria, through the Central Bank of Nigeria intervention programs, is often unavailable in emerging markets. Hence, fund managers are stepping in and providing capital to portfolio companies. For the IFCs, interviews that has been conducted with market participants indicated that where dry powder is available, this cash can be used by FMs to shore up investees. In cases where the FM approach to shoring up investees is consistent with that taken by the fund managers that successfully emerged from the global financial crisis, during which they tended to take a more cautious approach and focused on shoring up existing assets. So in the short term, the financial performance of the asset classes in emerging markets will deteriorate, but a common sentiment amongst all the LPs and general partners in the private equity asset class is that PE funds returns will take a hit in terms of reduced PE funds distribution to paid-in capital, and the net internal returns as a result of the following factors. Just these final factors as we wrap up. Write-downs in portfolio company valuations in the first quarter of 2020, reflecting the portfolio company's vulnerabilities discussed above. Exchange rate volatility, as we see challenges in Nigeria, for example, which can undermine the returns generated by investees in local currencies and impact cash flows available to fund managers, and challenges in exiting investments, as the exit processes are delayed in various countries, and many deals planned for 2020 will definitely not materialize. So overall, private equity market volumes in the emerging markets are expected to contract over the next 2 to 3 years, both in terms of fundraising and levels of activity. Preliminary evidence shows that emerging markets' access to international markets has worsened significantly since March 2020. So that is the verdict from the International Financial Corporation Analysis and Research, telling us how challenging private equity investments has been since the disruption caused by COVID-19. What is happening in emerging markets is not isolated from the frontier markets like Nigeria, that raised about 337.5 the disruptions of COVID-19 pandemic. We will continue this conversation next week, looking at the private equity activities and the frontier markets, but don't miss out from that. So just take note of it. That is not an easy period for investments from PE or VCs. It's a challenging time, and there's a lot that has to be done. I just want to wrap up by saying that also the apex regulator, the Securities and Exchange Commission, has taken note of the opportunities that private equity can bring for capital into the country, and they set up a private equity committee, and there was the summit. We'll also bring you updates from that summit, Nigerian Private Equity Summit, and the activities of the Private Equity Committee of SEC and how they are planning this period to navigate and provide a good environment for more private equity investments to drive our economy. Developments and read and analysis. Also this period, we implore you to send your views and comments to news@prochange.com, particularly your thoughts from private equity and venture capital investments in this period. What opportunities are there and what can we do better to improve the markets and the economy? Till we come your way again, thank you for watching. Let's make it happen again tomorrow, same time, 10 a.m. Have a nice day and stay safe.